Crypto is on the move and it's moving in the green direction. Why is this? Well, Eric Balchunas, an analyst from Bloomberg, reports that there is a good chance that the ETH ETF could be approved this week by the SEC. They've moved the odds of this approval up from 25% up to 75% just last night, and then we saw a big green candle out of Ethereum. What can I say, guys? Like, I have been calling for retail coming back into the market for a little while, and specifically this week in our newsletter, I talked about the time period after we saw the volatility in GME back in 2021, and then what we saw next for Bitcoin. This screenshot here is actually taken from our weekly newsletter, the Weekly Insight. But look, as you can see, when we had this volatility, the short squeeze on GME, this was when Bitcoin, and then it pulled back. That's when Bitcoin also pulled back before Bitcoin surged and we had a blow off top. Well, do you think it's a coincidence that retail are coming back and then we see pumps like this and news like this around the ETH ETF? Yes, obviously they're not related because there's no similarity in narrative, but in terms of like where we are in the cycle with liquidity, and how the market is starting to uptick now before the election, structurally things look very, very similar. So what I want to just talk about is I actually think we're more like 2017 than 2021 in this cycle because I think for some reason we had a stunted cycle last cycle. You could blame it on Terra Luna collapse. You could blame it on like USDT or Three Arrows Capital, UST, sorry, not USDT, or Three Arrows Capital's like explosions that might have stunted the growth. But if you go through the 2013 or 2017 cycle, you can see that we had a much more parabolic blow off top than we did actually last year in the 2021-2022, where we had the sort of double toppy pattern. That leads me to talk about the 2017 cycle a little bit, because if you look at this structure here for Bitcoin, we're going into Bitcoin now, and I'm going to jump back into ETH towards the end and some altcoins. If we look at this structure here for Bitcoin, this was taken from 2017. And guys, this is very similar to the structure that we're seeing on Bitcoin right now. Let me just take us to the daily. I've got a few little things to show you about this, guys. So if we look on the daily time frame here, this is Bitcoin. Let's just zoom in to this structure and compare it to this. Look at the similarities between this. We have a little consolidation. We break up, set a high. We're basically trading within that range for a while, setting lower highs, come down for almost similar to like a spring phase in Wyckoff accumulation. Break out, consolidate, and then break out higher above the top of the range. Well, Bitcoin had the accumulation, broke up to the high, struggled to set a higher high, didn't, came down, set some lower highs, had that spring phase, accumulate, and then we're breaking out. This could be where we're looking for a bit of accumulation here before we break out further. So that's basically what I said, and the comparison and why I said that that could happen similar to 2017, because this structure looks very similar. But then if we also take into consideration what happened next, I overlaid the fractal from the 2017 cycle onto Bitcoin, and this is where it would take us out to $300,000 Bitcoin by December of 2024. Now, I know that a lot of people are going to give me hate for that, call me a moon boy, whatever. They're going to say, oh, it's not possible because the laws of diminishing return, when things become higher in terms of market cap, the percentage increase that or the capital needed to increase percentage is obviously much higher. Whatever. Say what you want. Like, this is just my opinion. Whether we get there or not, obviously, it's a big call, and like the percentages, like I could be really safe and just say, oh yeah, actually, I think we're just going to go out to 100K and whatever, and if we go higher then that's great and I'm going to support it anyway. But I actually think this is my opinion. Like, I'm just going to give my opinion out there, and I know that it leaves me open for crucifixion if I'm wrong, but so what? I'd rather say what I think is possible. I was saying what I thought was possible towards the end of last year, saying that we're in a bull run, and no one was really listening to me, and guess what, we were. So does that mean I'm going to be right again? No, of course it doesn't. But the reasons I think it's possible, on a more macro level, are there's the most debt we've ever seen in history, sloshing around. We've got currency problems all over the world. We're coming into an election year. They're going to have to roll over the debt, so liquidity is probably going to increase. Can we get? We've also got the increased demand side pressure from institutions coming in for Bitcoin, and now potentially coming in for ETH as well. It looks like crypto is becoming a center or a focal point in the US election. All these things could push towards a more aggressive parabolic push for crypto than we've seen. And this is something that not a lot of people are pricing in, especially if we top at the end of this year rather than into the end of the liquidity cycle as 2025 would suggest, um, if you follow like Raoul Pal's work. So that's definitely something to take into consideration. And then on the short term, we talked about this specific wave count. It looks like a bit of a mess because it's obviously lines all over the place. But if you follow me over on X, I've talked about this for a long time, how I thought this wave count could be coming in, and it looks like it's pretty accurate so far. A few of the things that we talked about were the reversal of this wave here. Then we came down. Then we said, is this definitely enough liquidity to grab? Because if we look over here on trading different, we do have some liquidity at 56k. So, and a big but, we've grinded through the liquidity here from 67.7 all the way up to 69k, which is what I said our target was for this week. As we've grinded through there, it's obviously stopped short positions out and pushes up a little bit higher. And now we are so close to this big liquidity that I was talking about weeks and weeks ago. So when we were in April, I drew this when we were literally in this area here. Obviously, the time has taken much longer, not even than I thought. This was just an example of where I thought price action would go, not time-based, but more structurally. So we pushed up into this area that I thought we could have the reversal at, and if we go back to this chart, it was this area right here, and I'll show you why, because the fixed range volume, where's the fixed range volume? Here, the fixed range volume profile used to come in, yeah, it does still, comes in exactly there. We touched the fixed range, we came down, we grabbed the liquidity below the range that we've been stuck in. Let me just take everything off so you can see the clear range. Look, there you go, lovely range there. Look, if you look at my cursor just below that, we came below into we grabbed liquidity, came back into the range, test the bottom of the range, pushing up for this wave now. So that's how I found that reversal area. That's why I marked it over here on trading different as well, which is this exact area here. So we reversed, we came down, we swept the liquidity that I was looking for us to do. We bounced around in this area, came out, again, retested this box. If we just drag this box all the way out, look, horizontally, struggled to break through that box. Once we break through there, we sweat the liquidity above, like chomping through that liquidity right now. And then now we are looking to potentially get up towards all-time highs because look how much liquidity is above us here. This liquidity area might be left untested, or maybe we have a fast reversal and come all the way back down. I'm more in the camp that if we do break into this liquidity area here, we probably go on and continue higher. So if we look at ETH was doing something similar. ETH was struggling. It came down, consolidated, struggled for a long time. Yesterday with that ETF news, blasted through that resistance level, and we're now at a retracement level. But one thing I would side on is like an air of caution, because if we look more zoomed in on like the hourly time frame, you can see that the RSI for Bitcoin, for example, is overbought and potentially coming back to the downside. If you can see on the 4 hour, it's the same thing, overbought, potentially coming back to the downside for a cool off. So in the short term, maybe we have a bit of a cool off. Everyone's still hyped about the ETF news, and as they should be. If that comes through, it's brilliant news. But it's definitely edge on the side of caution, because remember when we had the Bitcoin spot ETF, all the drama that happened around that. We had Cointelegraph with the fake filing. Is it going to file? Is it going to be approved? Yes, no. Yes, it has been approved. Oh no, that was fake. And then it actually got approved, and then we started to rip. So eyes are on. Eyes are on Congress. Eyes are on the SEC. The other thing I want to talk about is XRP and Ripple, and like, if all these negative stories and all this negative pressure is being moved to the SEC, all the eyes are on the SEC. I really feel like this could be a time where we get like a double bubble of positive news. If we get it, like if we get the ETF approved for Ethereum while SEC have their wells notice into Ethereum, basically saying it's a security, or what they're going to do, approve the ETF as well at the same time. It looks like that's going to happen just because of how political this is all getting. And if that's the case, do they just be like, okay, let's just settle with Ripple, let's get ourselves out of the spotlight of everybody? Gary Gensler obviously wants the treasury job. He doesn't want to become the public villain completely. Obviously, Trump introduced crypto into his election campaign, and all of a sudden now it's a bipartisan issue. So Gary Gensler's under pressure, Elizabeth Warren's under pressure. Does this change things? Does this mean that we could see some green lights if the Ripple case got finished and the Ethereum spot ETF came out, it's a green light for altcoins. And as I also said in this week's newsletter, this is what happened next in 2017 after Bitcoin broke this particular level in the respective cycle. So after it broke through that all-time high and we had a clear break of the all-time high, this is what happened for Bitcoin. It rose 1,400% in 230 days. And in that same time period, or slightly longer because they had a little delay behind Bitcoin, this is alts I'm talking about, they rose 3,400%. So it could be time to get your moon boots on, guys. I'm not saying it's definite yet. We've still got to break through this liquidity and have that push higher. I also, as I said in the short term, think we need a cool off. That could just be for hours or maybe a day or so. Maybe Bitcoin pulls back a little on this push up, consolidates for that next leg higher. I would like to see us break through the liquidity up to about the 80,000s, come back, test the top of the range of support, and then start to send it again. Let's see what happens next, guys. Hope you enjoyed. Let me know what you think in the comments. Peace up, A-Town down, as I should say.